everybody, and welcome to Ticker Talk for Wednesday, February 22nd. We're going to take a quick look at the markets, but first we got to go through a little disclaimer here. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All investment and trading decisions are your own and done at your own risk. I am Kevin D in the Discord. I've been trading for, mostly about 25 years now. Currently a chartered market technician level 2 candidate. And born and raised in Vancouver, love sailboat racing, hiking, riding my bike, and doing all sorts of fun outdoor kind of stuff. You're watching the recording. This is a great time to go ahead and smash that like button. It really helps us out. And let's get right into this here and take a look at the markets. So we'll start with the major indices. We'll take a look at some of the important indicators like VIX, and we'll take a look at the 10-year yield and the dollar. We'll look at some important sectors, and we'll see if there's any of the Souths that we were looking at over the weekend have done anything. But it's been a bit of an odd week, very, very choppy week in the market, and down week so far. So let's get right in and take a look at the SPY. So this is the S&P 500, the SPY ETF, and you can see I've still got the Fibonacci retracements on the chart here. We've got that long-term downturn that we broke through. We had been forming a bull flag, and we broke out the bottom of that yesterday. And we continued a little lower today, but we did come off the lows. And take a look at where we got to today. Now, remember, I pointed out this Fibonacci a long time ago, or, probably a couple of weeks ago now. Once we sort of looked like we maybe had put in a high. Where are retracements going to be? First we looked at this 25% retracement. Then we looked at the 382. And here we are today, tagged the 50% retracement and the 50-day moving average right there as well, and we bounced off of that. Very logical place for this to bounce. Now, is this going to hold? Your guess is as good as mine. I think it will hold for now. We've got these Fed meeting minutes behind us. Those were today. Not really anything new in there. They weren't terribly... they talked about recession a little bit, which I think might be new. I don't know if they've talked about recession before, but they also, didn't really seem to care either. Their primary goal, they just reiterated that their primary goal is tackling inflation. And if they have to raise rates to do it, that's what they're going to do. So there you go. It's a ways until to the next 3-4 weeks until the next FOMC meeting. So I think there's a really good chance that this market just chops sideways for a while. Maybe this 50% retracement level here at around 396, maybe that's the bottom. Maybe we have to come down a little farther. I'm looking at an area around, down here, this line here, the 618, around 392. We've got, some support in there. So, a possible chop between, 392 and 394, and then up to around 408-ish. Wouldn't be at all surprised to see it chop in that range for the next 3 or 4 weeks. But I don't think we're going much lower. There's just so much support in here. And I think that people are really going to buy this. I really don't think we break this downtrend line. I think, as far as this pullback goes, we're very near the bottom of this pullback. So that's where we are in the SPY. Qs, I think we're going to see similar price action here. A little farther off that 50% retracement, which is nice, right? The NASDAQ has been outperforming the S&P 500, which is great because it was the other way around for so long, and we were worried because the NASDAQ was lagging. So you can see today the NASDAQ bounced at its 0.382 retracement. And we've got this big gap down below. We've got that 200-day moving average just below here. So again, lots of support below here. Lots of reasons for it to bounce below, and also reasons for it to bounce right here. And again, I think we just go sideways here. We'll take a look at IWM really quickly. and see how this did. And this, again, also outperforming the S&P 500, but this one has cut through its 382 retracement, and looks like maybe it will visit this 50% retracement. Although we've got an important support level here that it's trying to hold. We're just below it, but we are kind of trying to hold in that zone. Let's move on to the VIX. So this is where we're not seeing the most promising action here at all. Not happy to see this yesterday. Gap up so strongly and then continue higher out of this range. That's not ideal. This is sort of this is the beginning of a new uptrend. It looks like. We've got a high here. We've got a low here, and now we've made a higher high. So not ideal. We need to see VIX pull back here. We do not want to be in a rising volatility environment right now. And if the markets do go sideways and get a little range bound, like I think they will, I think that we will see the VIX come down. Let's look at that 10-year yield. And this, has continued higher. We thought this might roll over here when it hit this pivot and pulled back, but it moved up quite nicely off of there and is now above that pivot. Doesn't have a ton of momentum though, and today was a very indecisive day, so that's nice to see. Now that we've got these minutes behind us, I think things are really going to sort of settle in now, and we may see this start to go sideways or turn down a little bit. And let's take a look at the dollar. So the dollar is continuing to very slowly sort of grind up, but really kind of hanging around in this zone. So this isn't really telling us a lot. Not happy to see it moving up. Would much rather see it moving down though. Okay, let's see those for the weekend. I'm not sure if anything's happened in gold. I think maybe not because it didn't hit my radar. So here's gold. Yeah, not a lot going on. Still hanging around, sort of consolidating in this area here, down the bottom of the consolidation now. Copper, I think, might have moved up a bit. Yeah, it did. Okay, so it's hanging around, making a bit of a, potentially a little bit of a bull flag here, above its moving averages. So that's good. I mean, copper is, when copper is strong, this is obviously good for, should be good for equities. So this is a positive sign here. How about oil? Let's see what's going on in energy land. So oil, another down day today. Gonna come in and test this support again, and we really don't want to keep testing support in this area because if we test it enough, eventually it's just going to break through. How about nat gas? I noticed that this was up earlier in the day. This candle here is not today's candle. This green candle is today's candle. This is actually tomorrow's candle. Has just started forming as the futures have reopened. So yeah, I mean, this is better than we've seen recently, right? The downward trend here over the last week has stalled, started to move up maybe. So that's good to see. XLE still kind of hurting, but right at support. You can see we've got a support level here. This should actually, we're going to have to change this to a major support level. This is a pretty important level we've got right here, and we did bounce there. You can see the 200-day moving average is right there as well. So this has got to hold. If this doesn't hold, then we see a whoosh. I think a quick whoosh down much lower here. We can go over a lot more of that in detail on the weekend. Our discretionaries, of course, have pulled back, had an indecisive day. Industrials, they pulled back this week. Again, having a bit of an indecisive day right on top of support and the 50-day moving average. That's good. We do want to see this. This needs to turn up from here. Financials. They, of course, pulled back as well. Look how quickly they moved down. Once they broke this important support level, look how quickly they moved. But this is a very positive sign that they were caught by the 50-day moving average. I think we're going to see a lot. It's really this 50-day moving average is going to be important. If indices and sectors start breaking through that 50-day moving average, then we've got to be really concerned, because we'll also see a lot of individual stocks moving below that 50-day moving average, and that will get people really bearish. XLK or technology. This fell out of its box, broke support, and has been moving down fairly quickly. Today's candle doesn't look great, but at least it's a little indecisive. Communications, same idea here. We were, trying to develop support there. We fell out of that on Monday, of course, on that big down day. But at least we got a green candle today. A little indecisive though. Meta. We'll just take a look at the FAANGs really quickly. This continues to the downside. Maybe it's finding support here at this minor support level from the past, and just above the 21-day moving average. But this could easily continue to roll over. Apple, it's finding support where it should. So that's good to see. Right at the 200-day moving average, that bounced today too. And then got itself back up onto the 21-day moving average. So it hasn't completely filled this gap. That's good to see, but it's got to get up and go and get away from this area. Amazon. So Monday, Amazon came down and almost touched its 618 retracement and the 50-day moving average. It moved away from there today. A little bit of relative strength in Amazon today, so that's good to see, because Amazon has been a weak link in this market recently. Netflix. This has come right back to, remember this 329.82 level. This is where that old gap was, or it was the top of that old gap. It became resistance, worked really well as resistance. And now we get to see, is this going to work really well as support? It should, but I'm a little surprised we've come back this far into it. So watch out if this breaks. If this breaks, everybody who's been buying up in here and even buying through this consolidation, expecting to move to the upside, they are going to bail out of here so quickly. We could see a really fast whoosh down in this if we lose this level. Google, and again, just continues to the downside, but hit a support level and bounced there today. Seeing a theme here. It's good that the TA is working still, right? This is why, I think I mentioned in the morning briefing this morning that yesterday's selling, while it was relentless, it was orderly and it wasn't panicked. And the same goes for today. The fact that we managed to bounce at all these support levels on the charts, bouncing at the 50-day, or bouncing at moving averages, bouncing at support levels that are on the charts. That's really important to see. That's good to see. It tells us that the market is not panicked. Which is good to know. Now that could change, obviously, if we start losing these levels, but for now, the sell-off is just orderly, and that should give some hope to the bulls, who will come in and buy these dips. All right, moving on from Google, we'll take a look at Microsoft. Again, right at support. Tesla. This is an interesting candle in Tesla, isn't it? So we've been chopping around, but sort of grinding down, a little bit messy, and we've got a nice hammer candle today. Not really much of a level there that it's come off of, but whatever. It found a place to bounce, drew a nice hammer candle. Not a ton of volume on that, but we'll take it, right? I mean, that has the potential to be a reversal candle and show us some more upside tomorrow. SMH, semiconductors. Oh, and speaking of semiconductors, NVIDIA had earnings. We should actually take a look at that one. We'll look at that right after this ETF. NVIDIA had earnings after hours, and it's popped up really nicely. So we should expect to see this gap up tomorrow. So that's good to see. It'll be gapping up and moving away before you even hit this resistance zone. But let's take a look at NVIDIA. First, we'll look at the daily, see where it's at on the daily. And you can see indecisive candle right on that 21-day moving average. And I can tell you that we have a big gap away from that 21-day moving average right now. Let me bring up an intraday chart and NVIDIA. Look at that move. From 207 up until about 226. So pretty close to 10% move here in NVIDIA. We got to go back 4 days, 4 or 5 days of down that is erased in pretty much one 15-minute candle here. Pretty amazing move for NVIDIA, so that's really good to see, and that's actually been really good for the markets as well. And we should look at some of these. Actually, it hasn't. This is the Qs in the after hours. I would have expected that to move up more than this, but look at it. I mean, it got up to the day's high, so that's nice to see. SPY should have moved up as well. And yeah, we've had a bit of a move up in SPY, not up to the day's highs though. But yeah, good to see. So, the potential, we've got a potential turn here coming for tomorrow morning. All right, let's go back to our daily charts. What else do we have to look at? I'm not sure if there's anything going on in healthcare. I mean, it's just been on the way down. I haven't been paying much attention to it, and it's still holding out in that range. I know that biotech yesterday really kind of fell apart. It had been consolidating. There was, hope that maybe it can get up and go and get out of there, but no, it fell apart, fell to the downside. But look, found support at the 100-day moving average. Again, technically well behaved, even though it's kind of falling apart. How are our defensives doing? They were even selling the defensive the last couple days, right? Here, that's REITs. How about staples? Nothing going on in staples and utilities. Nothing going on there. How about there wasn't really anything going on in HIMS, as you might expect. Nothing really going on in WYNN is one of the setups that we're watching closely. Notice that we've seen a lot of big red candles, especially yesterday's candles, right? Notice we don't see that in WYNN. WYNN is showing relative strength. And today it was up 0.5%. It's still in this nice tight consolidation. I can't really call it a bull flag here, but it's a bit of a downward channel, but nice and tight. Let's zoom in a little bit, and we can see that even it's barely any downward momentum here. This looks really ready to go, and I think if we get any help from the market at all, this is really going to take off. So if this market, if this market is green tomorrow, and this is starting to break out here, I think this is really worth jumping into. However, this is not investment advice, and you have to make these decisions on your own and manage risk on your own as well. But I mean, look at, the risk reward on this is pretty good. You're going to be entering somewhere, between 109 and 110. And, a loose stop on that is going to be just under 106, right? I like this. So I'll be watching that one for sure. And Netflix, we already looked at Netflix, so okay, that's it. I am done yapping about markets. So why don't we move on? We're going to take a look at your guys' tickers. I want to say hi to some people who've showed up in the live session. I want to say hi to Callie and Casey Dots. Welcome, you guys. So I think you guys know the drill. If there's anything you want to take a look at, you can either unmute and we can chat about it, or you can drop your tickets into the chat, and I'll pull them up on the chart here, and we'll take a look and see what's going on. So, Callie, we haven't seen you in a while. Do you want to go first?
How you doing, Kevin?
Good.
How's everything? Yeah, I keep missing your lives. I've just been, busy, so
Right.
I never really.
I
But yeah, how's everything? So I wanted to look at Celsius.
oh,
I
okay.
actually feel like I missed like I remember when you had what you showed, I think, like an island. I forgot the name of the formation, but like there was a should have where I should have sold and I didn't, so I'm kind of upset where it's at now. But
Okay.
I kind of saw it coming because there's a lot of news on it as far as like lawsuits and stuff. So I think that's what did it.
Right. Right. Um. Yeah, I'm not sure. I don't see an island reversal in here, so it wasn't that. But there was kind of back over here, there was a bit of a head and shoulders. And that didn't really play out at all. That just sort of, I mean, it did come down out of there, but also, it broke this long-term trend line. And we've just really, ever since then, been in this sideways consolidation, right? And it hasn't done much of anything. I mean, you could play in this range, obviously, from where are we, mid 80s, 85, and the high of the range is 120. You can definitely make money inside that range. But it can be really frustrating trying to trade in there. And really frustrating if you're holding it. So I guess you said you're still in it, right?
Yeah, I'm still in. I mean, the good thing is I'm in at like 33 something is my average.
Oh, cool.
But it kind of hurts to see it go all the way to 122, and I only like took a little bit out. Not,
Right.
I'm still learning how to invest, and like that someone told me at one point you should take out what you put in, but yeah,
Sure. I mean, I like to do that.
you do, right?
I mean, yes, I do because, I do and I don't. Because it seems, when you take some out, it's usually because it started pulling back and you're getting nervous about it or something. And then, eventually it'll bottom out and you don't end up adding more in, and then it goes higher and you're like, oh, I wish I had the full position. Um, but so it is kind of a catch-22. But there's nothing like having a free trade on, right? Um, that's always really nice to have. So it's easier to do that with options than with owning stock. Because options you can get much bigger percentage moves than you can in owning stock usually. So what was I going to say? So where do we go from here? I like the look of today's candle. It's a hammer, right? We had a pretty decent support level here that have been holding up quite well. We broke through that, had a nasty red candle, obviously threw a scare into some people, and unfortunately broke down through the 200-day moving average. But today, they came in and they bought the dip. So that's awesome. So there are buyers out here, and they didn't even wait until this, 83.50 level, right? They bought it a little ahead of that, so that's great. Volume is okay. Volume is above average, not quite as much as yesterday's red day. So this bodes well for a reversal for tomorrow and getting back up above that level. The sooner this can get back up above this level, the better. Now, if we break below this level, this 83.50 area, it could get ugly. You can see here how but you have to be careful. You got to treat this as a zone, right? Because it's showing you that it can break through there and then go back up. Like you've got these two candles here where it wicked down below and went right back up. So that's not as scary. This one here, though, this was pretty scary. This is over earnings, though. Yeah, okay. It came down through there and was not looking ideal, because now you've got two closes below that line. Most people will want to get out, with two closes below that line. But then the following day, I guess on earnings, it gapped up and made a nice move from there. So you really got to watch out here. I would say more than a close or two. below this level, and it is probably going down. And testing some other levels like 73, or maybe even all the way down here. But I think that's the lower probability outcome here. I think this turns and moves back to the upside. But does it go much higher than this? They're going to have to deal with all these lawsuits. So there's all this fundamental stuff. The company's going to have to sort out before this can actually start moving up, moving up and making new highs. So I think this 110. I think 110 is kind of a no-brainer. So maybe that is a place where you want to sell a big chunk of your position when it gets back up there. That's what I got for you on that. What do you think?
Yeah, thank you. Yeah, that's exactly what I'm hoping for. Best case scenario 110, even the one, and I'm just gonna, take off a good position. Once everything settles down, because I still believe in the company, right? So like I buy the product, I have people that buy it. So but I don't know. These lawsuits, it's never a good thing. The good thing about it, though, is like I said, I'm in at 33, so I still have cushion. I just don't want to see nowhere near,
Yeah.
But yeah, thank you.
Yeah, you definitely don't want to be hanging on to this if it's pulling back. Okay. Let's. I see Casey Dots has been typing away in the chat, so I'll read out what we've got here. So Casey Doss says, I have been away from the market and Discord for a week now. So you probably feel a little rusty, right? Even after this long weekend, coming back on Tuesday, I just kind of want to watch for the first hour or so and get back into it. And even doing the briefing over the weekend, because I did it on Monday, I just felt a little just out of tune with things. It was weird. So yeah, even just missing a day can throw me into a wrench. So yeah, I'm sure you feel a little out of touch. So okay, you're asking what is contributing to this recent downtrend? I've seen a few BIF players talking. What's a BIF player? Am I showing my age not knowing what that is? A few BIF players talking recessions. Is this
Probably means big.
Oh, big. Oh, yeah, okay. I thought it was some slang I haven't picked up on. Good. Doesn't make me feel old then. Is this earnings or is it normal profit taking? Sorry, I've been really busy and figured I'd come here and ask. Of course, that's what we're here for. Come here and ask. Or ask in the Discord. It's all good. So yeah. Last week was really interesting. I talked about this in the weekend video too. And I think what I'll do is I'll pull up. I'll actually go back and we'll do a little bit of a. Oh, actually, we need the intraday chart. Okay. So what I was talking about last week with what was going on with SPY. So let's see. This is Monday, right? Yeah. Let's wind back to 17th. Yeah. Okay. Good. Whoops. We need this day. Okay. Good. All right. And so that was the 9th. This should be, yeah, okay, here's Monday. All right. Yeah, okay, good. Yeah, so Monday, we were up a bit. And then on Tuesday morning in the pre-market, we got the CPI number. And it got really choppy when we went down a bit, but then we went back up again. And the CPI number came in a little hot. Not super hot, but a little hot. But, market didn't like it, and we chopped around, and it got quite choppy. And, in here, I'm sure everybody thought, oh, this is it. We're going to have, big down day. but it turned around. It put in a nice reversal here, and then went up in the afternoon, and it went up really nicely. They just continued to buy all afternoon. Great. Then we went down a little bit. We had another report. I think this one was retail sales. Came in a little hot. And so when retail sales come in hot, that's showing us that the consumer is happy. It's good for the economy. But when we're trying to fight inflation, if the consumer is still spending lots of money, then that is inflationary. And the Fed wants to fight inflation. They're going to do whatever they have to do, which means raising rates. And when rates go up, then our tech stocks especially come down. Because tech stocks generally don't make money; they're borrowing money, so money costs them more to borrow. So we don't want to see rates going up. So when the retail sales came in hot, we sold off a little bit, but we recovered really quickly. And everybody was like, okay, well, we recovered from PPI or CPI yesterday, or recovering from retail sales today, and we had a nice strong upday. Off of a hot number. This is great. I mean, this is showing good strength in the market. Well, then we get the producer price index on Thursday morning, and it came in really, really hot. And we see we sold off hard. And then, as soon as we opened, they started buying again. They're like, the hell with it. We don't mind these hot numbers. And bought again. So now I'm thinking, I'm sure everybody's thinking, wow, this market is really healthy. It can withstand anything. Well, that didn't last long, because in the afternoon on Thursday, one of the Fed governors, Bullard, who is very hawkish, and he always says stuff that knocks the market down. But he's an outlier. I don't know why the market listens so much, because he's always super hawkish. He's that one outlier that you should toss out, right? You should toss out, anything any of the super doves say. Like, I think, is that Daily? No, the other one. I forget her name. She's super dovish. You kind of don't want to listen to anything she says. You don't want to listen to anything Bullard says either, except that the market does listen. So he comes out, he's super hawkish. He's saying we need to go back to 50-point rate hikes. And he didn't say a 50-point rate hike. He said 50-point rate hikes, which is very hawkish, right? So the market sold off on that, and it did not recover from that. And you can see that we have not recovered since. Because now, we are worried about, because once he said that, then people started to worry about all this hot data that we've been seeing, and worrying that inflation is coming back, and that pullback in inflation we saw is just now people are worried that the pullback in inflation is transitory, and that the real trend in inflation is to the upside. So there you go. That's why we've been going down, and now that we've got those Fed minutes behind us, I can't remember what's coming up the rest of the week, but I don't think there's anything really big the rest of the week. So maybe now we can kind of put all this behind us a little bit, and then start to grind our way back up. So hopefully that answers that question. And Casey's also said here, I also want to look at coin. Okay, we can definitely do that. It's been very volatile, and I think they had earnings recently, didn't they? I'm not above water, a little not sure if I want to hold, since I've been busy lately, unable to watch the market as close as usual for at least a month. I'm training someone at work and can't really watch during trading hours. Okay, I totally understand. You've probably got somebody looking over your shoulder all day long, and flicking your screen over to watch your stocks is probably not a great idea. So let's take a look at coin, and we'll go over to a daily. All right, so coin is a crypto. It's in crypto, and crypto is extremely volatile, much more volatile than the market. So that rubs off on coin. But this is putting in a pretty decent base, and I would say half decent bottoming pattern in here. You had this consolidation here for quite a while, a number of months. When it broke out of that, it came down and made a nice V bottom, and now you're kind of into the consolidation zone. So let's draw some lines around what's been going on in here, because there are definitely some important levels in here to watch out for. That's a good one right there. We got that up there, obviously, to the upside, right off of that level there. This pivot here is kind of sort of okay. I'll just actually draw the pivot from there. So I think that could definitely come into play as well. This pivot, right? Yeah, right at. Oops, it's actually down a little lower. There we go. All right, let's zoom in a little bit here. So, oh, one more thing. I want to look at the downtrend on this. Okay. All right, I'm gonna zoom in there and make sure that's in the right spot. That's in the right spot. Good. Okay. Okay, so you can see we've got some important levels. The main trend here, and there was an accelerated downtrend in here. I didn't bother drawing it in because there's no need to mess it up, because this, we've broken through that, and we've even broken through the main downtrend, gone up, come back, tested it, which is where we got that pivot from, and went back up again. Now, unfortunately, on the way back up, it didn't make a higher high before it started to roll over. I mean, it kind of got caught by this, the nasty week last week, and what's been going on this week. But everything in here is looking fairly positive, right? Like I said, the consolidation, the V bottom, you move up, you pull back, you test a little bit. And notice how it tested right on that 100-day moving average, moving up again, but not moving up very far and consolidating. So right now, I think it's really important that this hold above this 66.25 area, and then start moving up and away from here. If we start coming down through this pivot level from this low, so that's 53.66, which will also put you down through this trend line and the 100-day moving average, things could start getting a little scary. The 50-day moving average is coming in as well here. So this is moving up, so that's going to be up at this trend line and pivot area within the next 4 or 5 days, probably, unless this moves down really quickly. So lots of reason to find support in here, and for support to hold. So we shouldn't get too bearish on this, what's going on right now, but we would certainly get bearish if we started dropping through these levels here. So you might want to have that as your line in the sand. But I would be relatively bullish on this. I think we've got, basically, I think, what I was saying for the whole market, we may have a month of sideways ahead of us. And this could just chop around in this area as well for a month. And that wouldn't necessarily be bad. You know what? I want to get this level in too. I think this could be kind of important. Oops. Actually, no. Okay. Yeah, I think that's where we are on coin. Kind of sideways, but I'm not bearish from what I'm seeing here. This is not a bearish looking chart to me. This is a chart that it looks like maybe it needs a bit of rest before it moves up some more. Okay, so yeah, Casey Dawes says, yeah, it will be about a month. I plan to hold, unless they set an alert. I guess 54. Well, I mean, if you're going to set an alert, you're going to set an alert that actually gets you out. I would put that alert down at 53. Just under this pivot. and maybe even, you know, and if you get alerted, look and see where the 50-day moving average is at that time. So where is that right now? That's at 50. Because unless this drops really fast in the next day or two, that moving average is going to be coming up to that 53 level. And like I said, we've been seeing lots of stuff tag that 50-day moving average and reverse. Lots of that happened today. So, but yeah, that's the zone. 53 to 54 is the area you really got to watch out for, and below that, you probably don't want to be in it. So hopefully that's helpful. No, you're welcome. Marvin, anything you want to look at?
No, I've been sitting on my hand.
Oh, it's you know, yeah, since we last talked last week, it's been a good time to sit on your hands.
Yeah. You know, I did mark up the chart and I put it in there, and on like SunPower, and when I looked at it, it touched. It did touch a level where typically buyers come in.
Yeah.
And right around that time, it touched that level. At whatever time of day it did, it did a little bounce. So I think if the market does have a bounce tomorrow, then of course it'll bounce. But I'm thinking that in terms of it seeing any type of upward trend for sure is probably need to consolidate for a little while.
Yeah, this is a really, really important level here.
Yeah, that is if it breaks that level, then yeah, it's gonna, and it's broken it a little bit beforehand, getting around there like at 14, yeah. But,
yeah, over here and back here, it's, you know, I mean, it's really, you could kind of like, I mean, you want to have a nice sort of thick line right there to really highlight that for you, but you also want to, you know, you kind of almost want to do something like this as well, right? Just extend that zone out to remind yourself that this really is a zone.
right.
Do not freak out if it just, you know, if it pokes below here a little bit, because I think that it'll still find buyers down to, so where are we at? We're about 15, yeah, 15.10, almost 15 even. And even, you know, down to 14.70 or so is fair. It's still in the zone for sure. But yeah, I mean, it is like so many times coming down to this level. It's got to get up and go, and it's looking like it's kind of looking like it wants to break through.
Yeah, and I think when I posted it, it was like, oh man, it's day after earnings, and like it popped, and so I was like, oh, here's a double bottom pattern forming. This looks like, and then like that nice inverted hammer candle just formed, and I was like, oh yeah, perfect. Okay, well, we'll see how I was like, you know, I said I've been paying attention to it, so we'll see how it moves. But I do know the one thing I think the reason why I like this is because I know that trading typically or seemingly from historical purposes, like looking at the chart, that this area of trading between that 15 and like $18 range, it likes to trade there for a minute and then it pops. And then when it pops, you're going to hit $22, $24. It's just guaranteed. I mean, if history is history or price action tends to repeat itself, that's a pretty nice move, and a nice play to be in. So
however, this is
right. It's not a good sign.
Firmly in a downtrend still, right?
Right.
You know, if like actually, there's a couple. I mean, there's, you know, a couple of ways you could draw this. That's one of them for sure, right there.
And then you also have the other one too that I have. Kind of, I keep forgetting I like actually could have showed you my chart. I had it marked up. I'm sorry, but
it's all good.
But yeah, you have even a recent one. I mean, even one still that which is what happened the day after earnings. Kind of touched that even smaller downtrend right there.
Yeah.
And then kind of did a nice like a little pullback. So
yeah, I mean, you could go from there, but I think going from here is best. Mm-hmm. And yeah, I mean, it got in there and it turned right around.
Yeah.
Because that, you know, that's an ugly candle. When you see this candle, you got to think, okay, we are coming down to test the support again. There's no doubt about that, right?
Right. Yeah. So you know, I hit my like
nasty.
Yeah. So I was like, I'm getting out of this and just gonna wait.
Good. That's the thing to do.
So yeah. So yeah, I was between just looking at that, but when I saw that the day that kind of the market started to kind of turn, I was like, oh, okay. So yeah, that's only going to further push it. And the interesting thing was, I think it was Friday, it did form a hammer candle, and I was like, oh, it really tried to.
Yeah.
Last Friday, I was like, well, maybe there's still a little bit of strength in this, but then Tuesday was like, nah, no, no.
This stock has a bad habit of breaking TA.
Yeah. Yep.
But although sometimes it works, like look back here,
Mm-hmm.
two consecutive hammer candles, and that started a nice big move up, right?
Right.
So TA does work in this sometimes, but then you've got other things going on. Like look at this beautiful bull flag.
Right.
There we go. It's it's a nice orderly. I mean, obviously the flagpole isn't very big on this, but it's there. It's a nice orderly consolidation. Although it is sloping upwards, and those are dangerous because they do often break down. But man, when it broke down, look out below, right?
Right.
And then you've got it behaving really well off the support level. Okay, so that's cool.
Yeah.
But then you get these nice big green candles, and then boom, this nasty red reversal, this shooting star candle. Brutal.
Yeah. Like pretty much, yep. Fundamentals gone out the window in some ways, and then yep, it respects fundamentals. I was like, oh, great. So yeah. So yeah. So that's kind of the thing I just been doing. Just kind of like sitting and going through like the predefined scans, but for the most part, it was like, I guess if anything was this week, I've been pretty bearish this week.
Yeah.
I hop into anything. Yeah.
All right. Well, unless anybody's got anything else, I think that we will take a look at what we've got coming up for the rest of the month. I guess actually this month's almost over now, right? So yeah, I'll be doing the weekend video, of course, and then a week from today, which would be the 1st of March, we'll be doing another ticker talk. So I look forward to seeing you guys at the next one, and I think that's all I got. So thanks for coming out. If you're watching the recording, don't forget to hit that like button, share, and subscribe. And we will see you all again soon. Thanks, Casey Dots. You have a good night, too. Thanks, Callie. Have a good night. Marvin, of course, you have a good night as well.
You do the same. Take care, Kevin.
Talk to you guys later. Okay. Night, everybody.